Hello, everybody. Welcome back to another episode of the Sunday stream. I think we're just going to call this Sunday Futures. This is week 2. Did it last week. People said they liked it, so we're going to come back. And now we're officially, if we're doing this every week, we are streaming 6 days a week, folks. So Saturday is the one day you guys don't see me, but we are going to be here every Sunday, 7:45. I like 7:45 because it's 15 minutes before Robinhood opens overnight and the overnight trading. So in 15 minutes, we'll get to see if the bloodbath that we are seeing in the futures continues to exist in Robinhood's overnight trading. I wore the red because on a day like today, and maybe on a week like the week we're about to go into, although I actually, if you want some more bullish confirmation bias, you're going to get some bullish confirmation bias on the show. And I'm going to back it up with stats and data. And hopefully that stats and data doesn't get thrown out the window and we actually do get a little bit of a bounce this week. But we got to wear the red because obviously things are very red and markets are red and futures are red. And hopefully our portfolios don't go that red tomorrow morning. So we're here. We're live. Thank you, everybody, for being here. We got Jose, Hines, JP, Midwest, Bay Ray. Bay Ray says, oh, these Sunday streams are awesome. Too bad Amit hosts them. Thank you to Bay Ray for being here. Appreciate it. Brent, we got Brett in here. He said, Amit finishing up watching Lord of the Rings. So, I started watching a new show over the weekend. You guys have probably watched it because it's an older show. I watched it a decade ago, but it's back on Netflix. Prison Break. I'm watching Prison Break again. For some reason, I don't know what it is that I watched that show a decade ago. I already kind of know what happens, but I obviously forgot a lot of details. I'm back to watching it and I'm hooked. I'm actually into the show. It's keeping my attention. It's not letting me kind of leave, after 5 minutes of watching it. So although I do press the 10-second, the thing on Netflix where you press 10 seconds, sometimes when they're talking, I'm like, get this out of here. We got to move on to the action. So I do utilize it. So one episode, it's like 40 minutes. It becomes 28 minutes. I'm quick, bro. I just move on through it. But yeah, so that's what I'm watching right now. I'm gonna finish Lord of the Rings next week. I'm gonna watch the first one at least by next week. I'm gonna try to get that done. But Prison Break is what has my attention. All right, so we're gonna do a bunch of things in this show. We're gonna be here for about an hour, 15 minutes. The last 20 minutes of the show, we'll do the Palantir preview. For tomorrow. This is Palantir Eve as well. It kind of sucks because I thought going into today's show, or just a general Sunday stream before Palantir earnings, would be filled with exuberance and excitement and just energy. And now it's kind of if Palantir does well, is this macro even able to sustain a valuation premium that not only Palantir has right now, but that Palantir should be able to get if they have a good earnings? So I don't know what we're going to see in terms of the stock. We'll talk about that at the end of the stream for 20 minutes. But yeah, the excitement, Robinhood earnings is this week as well. My excitement for that is kind of gone because I hope they do really well. And I think Palantir and Robinhood are going to crush. But if the Nasdaq's down another 5%, they're just not going to, their stocks are going to be coiled up until the market's ready to rebound. And so we'll see what ends up happening with the stocks. But at least we got a lot to get through in terms of the macro. It is not my birthday. Don't believe anyone in the chat that says it's my birthday. For some reason, it's a running joke that it's my birthday. It's not. It's my birthday is October 27th. So please, no one believe. I get 7 birthday wishes a day, dude, from random people. Oh, happy birthday. It's not my birthday. I'm sorry. I don't know. If it was my birthday, I would be 85 at this point, given all the birthday wishes that I got. All right. So thank you, William. Put my Amit channel subscription on my new Robinhood Gold card. That's awesome. That's you're going to get 3% cash back for the $5 a month on the channel. I love it. Thank you. Thank you so much. Are you going to sell your hood calls? I will talk about all of that stuff as we get into the show. I have a lot of ideas on kind of where we're going and how I'm going to navigate my portfolio. But let's get into it. So we're going to start off with macro. I have a lot of pieces of data because I've been a junkie all weekend consuming. I had 5 phone calls on Saturday calling different people that I respect and trust, trying to get their perspective on what's going on. And so I want to synthesize all that and share it with you, along with showing you guys a decent amount of data that hopefully is going to be reasonable confirmation bias that is not overly bullish, but rather just saying, hey, things might be okay and it's not the end of the world. So before I get into my thesis on what's going to happen in the market, some of you guys already know if you saw my post on Twitter. Let's look at futures. And again, we have 10 minutes until the markets are opening on Robinhood. So we'll see what ends up happening there. Oh yeah, Buffett. I forgot to even mention it, but we'll talk about Buffett as well. Buffett sold a lot of Apple. So We'll talk about that. Bay Ray says, I must have missed your phone call, man. No, don't worry, Bay Ray. You were not getting a phone call. All right. Futures. Here we go. Dow Jones down 1.5% in the futures. S&P 500 down 1.84%. The NASDAQ, this is the tech-heavy ETF, down 2.43%. Small caps, which by no surprise should continue to get clobbered, down 3.52%. Look at the futures. The futures on the VIX, the volatility index. It's up 25. It's up 25%. It is absolutely insane. We are seeing a lot of pain. And then if I go to Japan, which we'll talk about Japan later, the Nikkei index is down 5.75% or 5.73%. So all the futures are down. The Japanese index is down. Japan matters a lot because Japan raised rates on Monday, which is potentially, and I'm saying potentially with a lot of caution because I'm still doing research on this. I don't have all the details, but from some of the stuff I'm reading, and again, not sure if it's true, there is an argument. I was showing Fridays. Let me show you the actual ones. Hold on. Let me show you the actual ones. Yeah, because I tweeted the picture of the actual ones. There is an argument that what's going on in Japan, this is the futures for today. Sorry, I was sharing the wrong tab. Here we go. This is the futures for today. Still all basically down 1%, which is obviously not good. There is an argument for the Japanese yen and what's going on with the Japanese yen to quite literally be a bubble that is larger than 2008, 2009. Now, I say that very cautiously because there are people that have been crying about this and yelling about this for a long time. No one was taking them seriously. Now, given what's happening in Japan, a lot of more people are taking them seriously. I don't know if that's true. I think there is some merit to the argument. I think saying that it's 08, 09 is a bit of an exaggeration, but we're going to talk a lot about all of the different things going on, including the Japanese yen and what's happening. It's not just about them selling bonds. It's not just about them raising rates. It goes a little bit deeper than that in terms of what people have been doing with the Japanese yen to finance some of their operations, particularly hedge funds. So we're gonna talk about that. But these are the futures right now. They're all down currently at the moment. And in 8 minutes, we'll see what happens in Robinhood when that opens up as well. Yeah, I just checked my phone for the update on the futures. They're down a little bit more. So exact numbers are VIX is up 4%. Volatility index. VIX was up 57% on Friday, which is just insanity, dude. Small caps are down 2.25, NASDAQ down 1.6, S&P down 1%, and then the Dow Jones down about 1% on the day. So obviously we are seeing a ton of volatility in the futures market. So let's get into my thesis on what I think is going on with this market. And then I want to back up that thesis with a bunch of numbers and stats. And I want to get your perspectives. If you disagree, you agree, kind of how you see it playing out. So I think we'll start off with the top line idea that I am proliferating in my mind, which is that I do not think we are in a recession. I think we are experiencing a pullback. And I think that pullback is incredibly healthy for a variety of reasons. One of the reasons is that we have not had a 10% pullback the entire year. And we are now experiencing it. We already had it in the Qs and the S&P. We have to get to 509 to get to that 10% pullback. So we got about 3% more to go on the S&P. Now, why do I think we're not in a recession? One of the sort of fundamental arguments that I've been struggling with all weekend to try to understand is what is the nature of a recession? How does a recession happen? And the way a recession happens at its very core, and we talked about this a lot in the market open last week, we'll talk about Buffett selling Apple as well, is that people lose their jobs. And when people lose their jobs, they can't spend. When they can't spend, earnings suffer for the economy. That's like the basic syllogism for how a recession happens. Obviously, there's black swan events, pandemic, subprime mortgage crisis. All that stuff can boil up and lead to a recession, but that's kind of the core argument. Something has to fundamentally break in the economy to cause a lack of jobs, whether it's a housing bubble, whether it's a tech bubble, whatever it may be. And based on the jobs data we got on Friday, it was not amazing, but there's two caveats to it that I think are very important to understand. Also, we'll talk about Iran as well, because Iran's not helping the issues we have going on. The first thing is labor force participation is going up. So we looked at this with Kris on Friday's market open. The reason we didn't do a market close on Friday is because we did a really long market open. So if anyone hasn't watched me talk with Steve and Kris for that last 90 minutes, it's in the chapters. I think that would be worthwhile to check out. Labor force participation is going up. What that means that more people are participating in the labor force almost at the same levels it was at pre-pandemic, but we're hiring less people at scale. So we hired 114,000 people. We did not fire 114,000 people. Now, the markets on Friday, which is why the algorithms, I believe, took over and had a massive sell-off, and I'm going to try to show why I think the algorithms took over as well. The market wanted 150,000 jobs. We added 114,000. So right there, the discrepancy between 150 and 114 led to the unemployment rate going from 4.1 to 4.3. Now it's basically up 1%. It was at 3.6. Another 0.3% gets you to 4.6, which is a full 1%. But obviously, unemployment is starting to go higher. The SAM rule, which we'll talk about as well, that was triggered. And based on certain metrics, if you look at whenever the SAM rule has historically triggered, you end up having a recession. However, we are not firing 120,000 people a month. We are just not hiring 150,000 people a month. So labor force participation is increasing. It's just not increasing at the level the market wants it to be able to sustain what you could call a healthy economy. Now, the reason I don't think this is a recession, and I mean, this is kind of the big thesis that I think everyone who's bullish at least has to some extent, is that this is what the Fed wanted. We've been talking about this for weeks. The Fed absolutely wanted unemployment to go up almost 1%. They wanted McDonald's to be able to lower their prices and introduce a $5 Happy Meal. Like the Fed wanted all of these things to occur in order to get inflation to come down. When you have rapid inflation, that can turn into hyperinflation. We had probably more than 10% inflation back in June of 2022. The Fed's simple mandate was to make sure we get inflation to come down, which is why we raised rates the highest we did in 40 years. Well, the raising of the rates have concluded into creating labor weakening and the consumer weakening to an extent. As a result, Bitcoin right here just fell below 58,000. So just got that notification right now. Bitcoin bottomed this morning at or this afternoon at 140 at 57.78. Then it went back to 59. Right now it's back at 58, just barely hanging above 58. The labor market has weakened enough for the Fed to be able to say they did their job. And because they did their job, I believe the Fed is now going to step in. And if the Fed does choose to step in, and we're going to look a lot of data in a second, that primarily means to me they are going to try to nail this soft landing. And I think the data supports the ability for them to nail a soft landing. What is a soft landing at its core? You lower rates, you re-stimulate the parts of the economy that are not stimulated. By the way, mortgage rates went from 7 to 6%. They went down to their lowest levels we've seen in 3 months, which is a good thing. You want to see these things happening before the Fed cuts rate. Now, before they cut rates. Now, when you cut rates, it's because something is breaking in the economy. However, the Goldilocks thesis this entire year has been J-Powell's been able to raise rates without breaking anything in the economy, which, yeah, we had a stock market meltdown in 2022, but over the past year and a half, that is, we've far surpassed a lot of those levels that we were at. So he was able to get the economy to rebound as he's raised rates. Is he able to keep the economy afloat as he lowers rates while also making sure inflation doesn't reaccelerate? Because if inflation reaccelerates again, then you're basically in stagflation and then we're screwed. And I think J Powell's going to be able to do that. And as a result, I think if J Powell's able to do that, there's going to be a lot of different opportunities to potentially allow markets to not do too bad. McKay, shout out to you in the chat. He says, Amit, I know a few close colleagues and friends, all small to mid-cap companies that are doing mass layoffs within the last few weeks. Another larger company just has to skip payroll this week. So that anecdotal data that McKay's put in the chat, I'm hearing from lots of people. I do not think that that is incorrect in terms of the levels of people or the levels of the amounts of industries that are saying, hey, we see weakness, we have to cut back. We're seeing this through companies in terms of what they're saying with the consumer and earnings as well. However, it's hard to judge this anecdotal data because there's a ton of other anecdotal data. For example, I tweeted on Friday, what's everyone thinking? Is this a recession or not? Lots of comments in those tweets saying, hey, we're fine. Our company's good. We're hiring more people. We're expanding. We are booked out for the next 2 years in our IT budget, yada, yada, yada. So I think a lot of those are conflicting claims, but a lot of people also in those comments said, hey, we're laying off people. So it's not like the economy is not weakening. It's not like there's not mass layoffs happening. It's not that unemployment is not starting to go higher. It is simply a question of, is J Powell able to cut rates enough to have a serious impact? And I don't know if 25 bips is going to be enough to stop that from getting worse, even though we do have conflicting narratives around unemployment going up or down. And I think he will. And if he will be able to do that, hopefully that is going to be a good thing. If not, then the best bull market of 2024 might turn into the worst bear market that we've seen in the past couple of years. And so we'll see how that plays out. All right, I'm going to get into a lot of data, but real quick, Robinhood just opened overnight trading. Palantir 2450, Robinhood 1750, Tesla 205, S&P 528, below 530, CrowdStrike 215, IWM at 206, the NASDAQ at 444, down 1%. Bitcoin 58,179. Tesla's down 1.7%. S&P is down 1%. Robinhood is down 2%. Palantir 2435, they were down 1.82%. Some other stocks, GameStop 2058, Nvidia 101. Nvidia's down, wow, 5.75%. Nvidia just took a tumble. Let's see if it goes below 100. Tesla 203, PayPal 61, SoFi 660. DJT 2750, Palantir 2413. Again, we'll do Palantir earnings preview in about 40 minutes. Coinbase 192. Shopify 50. Wow, Shopify 5350. Shopify's earnings this week. Shopify's down 10% this week. The biggest problem with Shopify is they're a consumer-facing company, and a lot of companies have come out and said the consumer is in a bad position. So that's the only fear I have on them. Amazon 165.97. Apple 207. Apple Apple's down 5. The only reason I'm laughing about this is because, like, how many like Berkshire, fanboys saw Daddy Buffett sell off 50% of his Apple, and they were like, "Fuck this, I'm out. If Buffett's out, I'm out." So Apple, that's just funny because Apple feels like people are just following Buffett into that one. But Apple's down 5%. Microsoft at 401. Netflix at 606. Netflix was at 670 2 weeks ago. Disney's at 89. Starbucks at 75. Alibaba 76. Bank of America, Buffett sold like 3 million shares last week, 37. That's down 1%. Dell is at $100. I don't even want to check SMCI. SMCI, yeah, under 600, 594. Palantir's below 24. Yep. Now, I hope Robinhood doesn't turn off the trading because I would imagine some people are going to start to really sell tonight. Last time this happened, they had way too much demand on the sell side and they had to stop 24-hour trading. Palantir's at 2390 right now. I don't blame them for that, by the way, because this is the only place you can go to trade stocks right now, right? So if their third-party providers can't handle the load, then I understand. But it obviously just wouldn't be good for optics right now. So hopefully they keep that open for anyone who wants to sell their stocks. NVIDIA's below 100. There you go. NVIDIA's below 100. We didn't even get into all the data I have to show yet. I have a lot of data to show. NVIDIA's at 100. Yeah. We got to get the screenshot under 100. We got to get the screenshot under 100. Oh my gosh. What's the volume on NVIDIA? 208,000. Sorry, 218,000. Overnight volume, 218,000. 224,000. So there's definitely retail that's coming in and saying, screw this, I'm done with NVIDIA. Stock market news. What's up, Evan? How are you? Okay, so we'll get back to Robinhood in a bit. Let's see if it recovers a little bit. But as of now, as soon as it opens, we are seeing some selling. Now, let's get into the bullish confirmation bias that we need to put up because we all need some bullish confirmation bias. And I don't think the bullish confirmation bias is delusional. I do think there's a decent amount of data to kind of get through all this. So first of all, let's go through a string of different tweets that I have to show. Okay, we'll start off with this. Let me put in the chat right here. Let me put the timestamp. Okay. So first things first, company earnings are performing. So this chart that you're looking at right here, 377 of the S&P 500 companies that have already reported have beat consensus by 2%. Now, this is the smallest increase since fourth quarter 2022, but 71% beat on EPS, 55% beat on sales, 45% beat on both. This is not like a perfect read of what's happening in earnings, but I think it's important to understand that it is not like, oh, here's the chart. Here it is. Now you guys can see it more in depth. It is not like what you're seeing are companies that aren't putting up numbers like we saw in 2021. In 2021, Meta was valued at $1 trillion, and their numbers nowhere near justified being worth $1 trillion. This is not what we're seeing right now. So at a core fundamental level, the first piece of bullish confirmation news to just try to like push back against the idea that we're heading into a recession and my overall thesis that we are incredibly oversold. We can get more oversold, but I do think we bounce back, whether it's this week or next week, off of that oversoldness, is because fundamentally hedge funds, investors, the Buffetts of the world, they're going to look at some of these companies that are beating estimates and they're going to say, okay, they've put up numbers. Their forward guidance hopefully matches some of that beat that they did in Q1 or Q2. And if it doesn't, then it's a slight miss. Why are we selling these off that dramatically? I mean, a company like Robinhood is the perfect example. It's trading below its 200-day simple moving average. It is below 30 on the RSI. It's probably going to open tomorrow below $17 given how the market's opening. That is not a company that has an enterprise value in the morning of $10 billion, growing 40% year to date or year over year. It doesn't deserve to be trading at that type of EV. So the first argument is that companies are beating their numbers. And as a result of companies beating their numbers, I think that's something important to understand. Next piece of news that I want to show. The Goldman Panic Index. So this is an index that Goldman Sachs put out of when we see panic and what happens after that. They use a variety of different methodologies to come to the conclusion that there is panic. Right now, we are at peak panic in August of 2024. Now, what tends to happen after that, as you can see right here by these green candles, peak panic July 22, then we had a bounce. Peak panic, this was October 2023. Then we had a bounce. Peak panic in April of 2024. Then we had a bounce. Now we're back at peak panic. That does not mean we are avoiding a recession. That does not mean we're going to avoid a lot of pain. But historically, when you have the types of peak panic that the Goldman index is showing, we're due for a bounce. Now, that bounce might be a great opportunity to get the hell out of some of these positions and hold on for dear life, right? But as of now, I do think we will see a bit of a bounce either this week or next week based on the fact that we are starting to see peak panic. Nvidia's down below 100. Nvidia's below 100. Robinhood, by the way, $17. Wow. Robinhood's down 5%. Palantir is 23.67. Palantir, it looks like it's going into the 20s. Nvidia, oh my God, Tesla's below 200, folks. Tesla is below 200, 198 on Tesla. Oh my God. McKay says, I agree. Jay Powell needs to cut rates aggressively. My only counter is sometimes recessions can be self-fulfilling. More fear, more consumer tightening, weaker earnings, more layoffs. 100% agree. And that is very possible to happen if it ends up playing out that way, especially because these are self-fulfilling prophecies. It just becomes a question of, and I'll talk more about this later, but just is Robinhood really going back to $8? Is Palantir going back to $14? You know, like if it does, I hope. The hard part is it's hard to have cash on the side, right? Because a lot of cash is tied up in the markets. But that would be an incredible opportunity. But it's a question of, does the company's earnings justify Robinhood going back to $10 and being worth $7 billion? Does it justify Palantir being worth $20 billion? Like, obviously not. And the question is, do people step in or do we just get a hell of a recession and the markets don't care? Nvidia, Amazon's at 162, Apple's at 205. Nvidia is at $99, folks. There you go. Down 7% overnight. Now, a piece of news did break on Nvidia, and that news on Nvidia was that their Blackwell chips are being delayed due to a design flaw. I don't know if this is correct. A couple media outlets reported it, and then a couple other people said, no, this is actually not true. So we'll see if that ends up playing out. But that could be an argument that it's down until Nvidia clarifies on that media report that their Blackwell chip is going to be delayed. That's not going to hurt their sales for the next 3 months, but it is going to be obviously bad for forward guidance. Robinhood's at 1676. Robinhood's down 7%. Microsoft's below 400. IWM's at 205. Why do I feel like we're on the fucking Titanic right now, dude? It's like a slow fall, and it's like you just know like the ship's about to sink, and you're just like holding on. At least we can all laugh about it, right? At least PayPal's about to go below 60. ARK's at $40. Palantir's 23. S&P's 527. S&P's down 1%. Could be green Monday when big buyers start swooping in. I think it could, but at least right now in the overnight markets, it's not the best. All right, so let's get back to some pieces of news in the macro. Then we'll go back to Robinhood. So we looked at the Goldman Panic Index, then we looked at companies and their reporting of earnings. Okay, now let's look at VIX, because this is very important for NVIDIA. Another reason I remain bullish on the market, CapEx is tracking to be up for the 13th straight quarter, particularly from the hyperscalers. NVIDIA is going to absolutely crush earnings, and the reason they're going to crush earnings is because CapEx is going higher and higher, unless in Q3, which we'll know in Q3 earnings basically in 2 months, Microsoft, Amazon, Meta come out and say they're decreasing their CapEx spend. NVIDIA is going to be fine because NVIDIA's forward guidance is going to project like just massive growth because those hyperscalers continue to pay. Which is bullish for the broader economy. It's bullish for AI. It's bullish for the AI infrastructure build out. And it's obviously bullish for NVIDIA. NVIDIA at this point kind of controls where the market goes. Now, if we have a pseudo recession or a rolling recession, whatever type of recession you want to call it, if we get to the point where the consumer is obviously weakening going into the next 2 months, one of the arguments for the bears, that is a solid argument, and one of the arguments might be, hey, Meta looks at their CapEx and they say, well, consumers aren't buying, advertisers aren't advertising, our stock is falling. Why would we keep spending money on something like AI when we already have a ton of GPUs? Remember, it's not like these companies don't have GPUs. The hyperscalers have tons of GPUs. The reason they're not scaling as they're not buying more GPUs, or they keep buying more, is because they want to stay ahead. So Google doesn't want to let Zucks get in front of them, so they buy as many GPUs as Zucks. But if you are in a recession and your top line metrics are declining, why would you keep spending on GPUs, right? The first thing you're going to do is get rid of unnecessary spend, especially if you already have enough H100s, GPUs, etc. And then B, you're going to lay off people. So one argument for NVIDIA's collapse is that if we enter a recession and Google, Microsoft, Amazon that already hate paying NVIDIA, it's an NVIDIA tax essentially, start not paying NVIDIA's estimates go to shit. And if NVIDIA's estimates go to shit, all hell breaks loose at that point. At that point, the market starts wondering, well, why was Meta spending $15 billion a quarter for CapEx anyway, if they could just stop it like that, right? Like if they didn't really need that much AI spend, is AI even a thing? And if we start questioning if AI is even a thing, then yeah, this is going to get pretty aggressive. So I think we're going to see how this ends up playing out. McKay says those companies have evolved though. Palantir and Hood are generating real profits now and unprofitable previously. I would be shocked if they get there again. If they did, I would be a heavy buyer. Yeah, and we'll talk more about that. But if some of these companies continue to get at horrible levels, I mean, if Nvidia at 99.31, if Nvidia goes down to like 80, it'll be trading at 15 times 2025 EPS estimates. It's a joke, right? It's not Meta you're trading at 8 times forward PE, but it starts to look like Meta at 8 times forward PE when Meta was $90. So we're going to have to really see kind of how this plays out. But that is one argument for why the market could get aggressively oversold from an AI perspective as well. So that's one argument in the context of CapEx. Okay, I just have a couple more things and then we'll keep going. So on the Buffett sale, before I go to the Buffett sale, so 2 more things. Goldman Sachs has increased their probability of a recession from 15 to 25%. They still believe that a recession is unlikely. They put out in a note, but they did increase the probability from 15 to 25. So just one piece of news in the context of what that means for a recession. And then the SAM rule. So the SAM rule is designed to signal the start of a recession. It has never been wrong since 1953. If the SAM rule was above 0.5, you entered into a recession. And we've seen it happen historically since 1953, almost perfectly every single time. Now, again, one of them happened in April 2020, but the stock market went up, right? So like look at this April 2020. We have the SAM rule get triggered in February 2020. This is when the pandemic was breaking out. April 2020, we officially entered into a recession. Unemployment went to 14.8%. Obviously, the pandemic, right? Everything shut down. Stocks went booming. Why? Because we printed money and we lowered rates. And I think there's a very, not a high possibility, but a possibility, you could even call it 50-50, that the same exact thing happens right now. We're not going to have unemployment at 14.8, but we are going to have the Fed lower rates aggressively to be able to combat some of this, which means the market does not need to collapse with the broader unemployment, with the broader unemployment rate going up because of the Fed being able to control rates. Now, is the Fed going to be able to do that? I don't know. But there's an argument that the Fed potentially could do that. And if they do that, then maybe that's a way they, save us from obviously a horrible decline. Nvidia's back over $100.90. Robinhood's at $16.20. Robinhood is down 10% overnight. Look, why is Robinhood down 10% overnight? Robinhood trades with the market. And I think if you're holding Robinhood right now, it's one of those things where obviously if Robinhood trades with Bitcoin in the market and the market's tanking, then Robinhood's going to tank with it. It's going to get incredibly oversold, in my opinion, if it gets back to that $14, $15 range. And you just have to hope that we don't have a massive recession, because then Robinhood goes back to $8, right? Like if we have a cataclysmic recession, it's over. Robinhood goes back to $8. If we don't, and this is a harsh pullback, but it's not a pullback to the point where it's unfathomable, then the dip gets eaten up very quickly on the first sign of strength. The question is going to be, when does that weakness end to the point where strength steps in? Palantir as well, 23.45. Palantir is down 5% in the overnight markets right now. Kris, can you just hop on the live instead of calling you? We got Kris in the chat. Kris, I'm going to I'm going to send it on WhatsApp if you can hop on. If not, let me know and then I'll call you. And then, and let's see if you can join. So that's what we have right now in the sort of macro news. Let me send this to Kris real quick. Let's send this here. Okay, Kris, it's sent. Now, final thing I wanted to show, and then we'll have Kris come on, is two things. First is this Japanese yen trade. So we talked about some of the macro bullish pieces of news that were, hopefully a little bit of confirmation bias, even if they don't fully have any effect right now, given the markets are tanking overnight. The Japanese yen carry trade. Okay, so what is this in a nutshell? I thought this was the easiest example to explain what's going on, and then hopefully that can give a little bit of insight in towards how the markets might be pricing this. The yen carry trade is when hedge funds borrow yen at super low interest rates. For the past 5 years, they've been negative interest rates, and invest the money in higher yielding assets around the world. It's a great way to make money when yen rates are low, and yen rates have been low for a while. But when Japan raises its interest rates, borrowing yen gets more expensive. What did Japan do on Monday? They raised rates by 25 bips. And as a result of raising rates by 25 bips, you obviously had some problems with the Nikkei index and overall Japan's currency. This puts a lot of pressure on hedge funds because their cheap financing suddenly isn't so cheap anymore. It's like a global margin call. They either have to find more expensive loans or start selling off their investments to pay back the yen that they borrowed. This can cause a lot of market turbulence because many hedge funds might be selling off assets at the same time. So a rise in yen interest rates doesn't just affect Japan, it affects all of us. In a nutshell, if hedge funds globally have borrowed massive amounts of yen at super low interest rates to invest the money in higher yielding assets like an Amazon or an Nvidia, and then the yen interest rates go up and you have to pay back the yen at a loss, right? Because you now owe interest on it. You might have to sell off some of the assets that you invested in, aka an Amazon, Nvidia, raw commodities, whatever it may be. I don't know to what extent are the hedge funds of the world that have engaged in this Japanese yen carry trade down on the amount of assets that they borrowed or the amount of yen that they borrowed. But there is a theory that is proliferating out there that is boiling up. And if that is boiling up, I don't want to say that's subprime mortgage type of bubble, but there are people that believe there is an argument that could be equivalent to that. We're going to need more data to see. And if that's the case, we're going to see a lot more selling because a lot of that selling is going to have to be ultimately impacted to pay back the Japanese yen that was borrowed. So that's one argument. I know it sucks to hear it, but that's one argument for why things could be boiling in the background. And that obviously could be bearish for the broader U.S. economy. All right, Kris, what's up?
What's going on, man? How's you doing?
Well, markets are dropping pretty badly. Robinhood's at 1593, Palantir's at 2340, S&P's at 526. Give me your raw thoughts. What are you thinking right now?
First, let's address the SOM rule, okay?
Okay,
so
let's do that.
You know that I've been bearish, not bearish, but at least like down on the AI plays. Like a lot of people gave me shit. I said, look, AI is in a bubble. I put it on my Patreon. I did like a whole analysis, like, hey, there might be a little bit of valuation reset. So I truly believe that is going to be the case where things need to be reset lower. This, though, is not the moment that the recession actually happens, okay? First and foremost, the SOM rule, as people quote unquote say, when did it come out? It came out in 2019, okay? And how did it come out? Some economists looked backwards and said, hey, every time the unemployment has jumped this much, automatically there has been a recession, right? So essentially that's like looking backwards in time, using data points and saying, well, because this happened in the past, this is going to happen in the future. First and foremost, there are huge differences between the recessions of the past and what we are going through in the present. If you look at the consumer is weaker at the bottom half of the income stream, but at the top of the income side, they're actually doing pretty well, right? So you have all these people that are sitting on sub 3% mortgages. They are doing absolutely well. They are killing it right now. They have so much disposable income that they can do X, Y, and Z with it, okay? I can understand the bottom half of the economic pool of people, they are not doing as well because inflation is hurting them, you know. So I think right now we have to dissect that. Second, if you look at the delinquencies among credit cards, they're going up, but they're not like super, super bad. Okay. They're not nearly the same level as they were back when in 2008 and whatnot. One of the things that I'll say right now, I think we are going to get a recession. Recessions happen. It's a normal part of the market cycle.
We
But
had
most
one in
recessions,
2022.
yeah. Well, technically, it wasn't declared a recession, even though we had two consecutive
Correct.
quarters of negative GDP growth,
Yeah,
right?
the stock market felt the effects of it more than Main Street America in
Right.
that in 2022. Yeah.
And it's kind of like this. Well, I think this time around, it may be a little bit more impactful to the general consumer, only because unemployment is rising, right? But I think the unemployment rising, there's still tons of jobs that are out there. So I think the labor market is loosening, right? Where now there's not as many job openings as they were in the past for the amount of people, but we're really, really low. The second thing is look at the labor force participation rate. There is still a ton of room for the labor force to grow from where we are today. Okay. So I think at this point, we need to take a bit of a break. Yes, the market's going to have these temper tantrums here and there. It's just a normal part. But I do think at some point, either next week or this week, Jerome Powell and the Fed may come out and do an emergency rate cut.
Now, okay, so here's the question on that. If they do that, are they admitting they would only be doing that not because unemployment went up to 4.3? They would be doing that because, someone taps Jerome on the shoulder and says, you got to save the markets. I don't think Powell comes out and does that because unemployment didn't go to like 7%, even if Robinhood's below 16 and it's down 30%, right? He doesn't care about that. He just cares about maintaining inflation. So what are the odds realistically think of him doing an emergency cut?
They're actually relatively high. The reason why is because if they wait until September, right, there's a huge amount of time that happens between then. The one thing you don't want is credit markets to start collapsing on themselves. And right now, if they don't do something, they might actually have something break in the economy that they're going to have to go crazy with in September and possibly even do a 50, if not a 75 basis point rate cut if there's something severe that gets triggered. The one thing they don't want right now is the cracks that are forming right now to deepen.
Right.
The other thing is, remember, they have cover. They have said that we're going to be data dependent, and the data just came out. Suppose the problem with this Fed meeting was that it was literally the data came out 2 days after the fucking Fed meeting.
Yeah.
If it had come out before the Fed meeting, we would have got the cuts right there in July. Like without a doubt, that we would have got a 25 basis point cut, and it would have arrested the current market downward move. So I think the Fed has enough cover to do an August cut if they really want to. I personally think that would be a little bit. I'm a little bit conflicted by that because the market can take it in two ways. The market can say, well, if the Fed is cutting early and emergency, that means that the economy is not good, which means that we deserve to be sold off. And then at the same time, it can also support some of the rate changes enough to the point where people are kind of scared from selling again, right? So the thing is, if you start the cutting process and you start projecting out uber bullishness on the cuts, that means that all the people selling right now, they're all going to be like, wait a second, no, let's reverse this. Let's start buying again,
Right. Okay, so why do you think then that the futures and the broader market are selling off that bad right now? We had the 10% pullback last week. What, in your opinion, is triggering markets to get us, the prices that I'm showing on the screen right now?
A couple of things. Number one is there is fear in the market, and when there's fear in the market, it's contagious, right? So the contagion is getting out there. The other problem is fucking the news about Buffett. Buffett selling half of his
I
position
haven't
in
talked about that.
Apple.
What is your take on that? Please talk to that. Why do you think he sold all of his Apple? Or half of it?
Well, a couple of reasons. Number one, if you look at the PE on Apple, it's around 35 with single digit growth rate going forward. Yes, they're doing share buybacks, but at the same time, Apple's growth story is very, very muted going forward, which means that right now he's probably looking at the market and saying there's probably better areas where I can deploy my capital, in which case Buffett might actually be seeing a ton of value in being out of the market for the next 6 to 10 months. In which case now, I mean, Buffett made his money by being a goddamn loan shark. See, a lot of people forget that, but everyone looks at Buffett and like, oh, look, it's innocent grandpa from Omaha. He just buys and holds companies forever, and he's a great guy. People forget that when Lloyd Blankenfein in 2008 went to Buffett, Buffett told him, "Bend over, open your butt. I'm about to give you the money that you want, but I'm gonna fuck you royally." And that's what he did to Goldman. He got preferred shares of Goldman Sachs with like a crazy, crazy premium. And even on top of it, he got like what is that thing? Warrants too. Like it was a crazy deal. So
So you think he's raising cash because something catastrophic is going to happen, or you think Apple was expensive?
Apple, both. It's kind of a both. You know, he sees more opportunity in the market. But on top of it, he probably is like, listen, I'm going to be a loan shark. I'm going to wait until something breaks, in which case they're going to come to me hat in hand, and I'm going to buy either something super cheap, or I'm going to take advantage of desperation and basically make them a deal that's just going to suck for them, but it's going to be great for him and Berkshire Hathaway.
Okay, so let's talk about what does this mean in the context of people's portfolios. So, I mean, I think everyone's underwater. It's hard to avoid that. Everyone can pout and cry about how they should have sold 2 weeks ago, but that doesn't do any justice. In my opinion, let me know what you think. In my opinion, there's a little bit of a test in a bull market. 2024 has been an amazing market. It's been a stock picker's market, so it's not as easy as 2020. But if you were picked the right stock, you did well. And I still think the year ends off in the right way. But you have to go through some turbulence to be able to get to the destination. Now, do you think this is turbulence? And at some point, Robinhood gets to $12, Palantir gets to $15, Carnival Cruise gets to $10, and people just say this is stupid, and buyer and a bid has to come in, which hopefully saves some of the gains that people had this year? Or is there something that could happen that could propel us to a 4,900 S&P end of the year, and everyone's kind of wiped out?
I don't see anything systemic at this point. All I see is just fear in the market. That's just kind of like first of all, it was the yen carry trade that probably triggered some of the initial selling, and then once it happened, the market's been really frothy, you know. And especially if you look at semiconductors, their forward earnings are like way up there, like almost like 28, 29 right now on the semis. So this is not. Dude, we're going to go through this. These are tantrums. Like, imagine right now, all the people that were crying during, I think last year, during the regional banking crisis and the commercial real estate thing, who's sitting on 150% gain on his positions right now? Because they were like, oh, you know what? These idiots are freaking in fear mode, and I'm going to be buying. It was me, right?
Yeah.
I'm telling you right now, do not let the fear get to you. There's great opportunities that are going to come your way. The one area that I would not be is the mega caps. I think if there's going to be a sell-off, the mega caps are going to be the ones that take a brunt of it. And there's a reason for that. Right now, 40 to 50% of all investments are done passively. And so right now, you take your money, you put it into a fund, a passive fund like, you know, the VT or all of these things. Majority of that money ends up in the mega cap companies. The problem that tends to happen is that when things go down and people start selling that index, where do you think all those sells are going to go to? They're going to go to them, you know? So I would say the market moves in each direction at a magnified pace because of how the market cap is how the indexes are weighted towards the market caps. So the mega caps, first of all, they're overvalued relative to the rest of the market. If you look at the rest of the market, the other 495 companies, they're overvalued to a certain degree, like 18 PEs and 20. but they're not like holy shit crazy overvalued, especially on a forward basis. So I would say, if anything, be careful of the mega caps and the semiconductors, but there's tons of value in other parts of the market. So,
let me ask you another two-part question, then we'll get into other parts of the market. Like Meta, let's say you have a $200 average. I don't think your argument is sell Meta.
No, don't sell Meta. But I would say, if you have short dated contracts, like call contracts on Meta, be careful. That's when you should, like right now, Robinhood, anything tech related right now. If you have short options, like less than 6 months, that is the thing that you need to be very careful of.
Right.
Okay. Because you're running out of time.
Right.
But if you're long dated options, don't worry about it so much. This market is going to do its thing. Here's
the next part of my question. Do you think if the mega caps are overvalued and they're going to get sold off first, if there is an aggressive sell off, does that go to small caps?
Eventually, everyone is going to get the recovery, right? But I think the small caps are going to get, it's more like, how do I say this? Small caps are not going to get sold off nearly as much as the mega caps. But let's caveat this a little bit further. The small caps are going to benefit the most from rate cuts. Why? Because they have the highest amount of debt relative to what is that thing called? They have the highest amount of debt. So the thing is, relative to their equity values. So if you look at all the small caps,
Kris, turn the phone off. It's annoying, please.
Yeah, it's my please. It's like I have like a group chat.
Tell the group the market's crashing. Just shut the fuck up. Okay, continue.
So what Tom Lee was saying was absolutely correct in saying that, look, the IWM could rise another 30-40%, especially on the back of rate cuts. Because the thing is, they right now, if you look at their balance sheets, they have a lot of debt on the balance sheets that don't have a lot of equity. The reason why they're getting hit so hard is because, Jesus Christ, man.
Kris, just put it on mute. Just go to do not disturb.
Say, options. I don't know how to do that.
It's because you have an iPhone 3 because you're too cheap to upgrade. That's the problem. Just put it on mute.
Yeah. So first of all, a lot of the small caps have a lot of debt. They're the ones that got sold off the most because when the Fed started to increase rates, they eventually got impacted the most, right? Another one. Great.
Kris, I'm going to show you right now. You see your phone? There's a button right here.
It's supposed to be on mute already. Hold on.
No, so you slide this down right here. Look at my screen.
I just put the phone on silent. Whatever. There we go.
Okay, good. This is Kris. This is the most boomer thing you've done ever. I'm just saying.
I am a boomer. Okay, so so the small caps are likely to benefit the most from the rate cuts. That's why Tom Lee said, "Oh, there's value in the small caps." Right now, with the sell-off that we're seeing, a lot of the valuations in the small caps are not that high to begin with. The one thing that's actually something that we have to be very careful of with small caps, though, is that you have to be very selective. There are
but there is no selection. If you buy IWM, you're not selecting anything.
Right. But the thing is, the point of IWM was just like the others, where the good parts of IWM would outperform so much that all the little ones that were junky companies that were shitty wouldn't necessarily matter. Right. So like right now, if you look at the Russell 2000, I would say about 30% of the Russell 2000 is complete garbage. Okay. Yeah, but the other parts of the Russell, they are really good companies that are growing really fast. Yes, they have debt on the balance sheet, but they're going to do really well. You know, so I would say if you're trying to optimize for gains, you have to look through the Russell and find the great companies within the Russell. Trust me, there are some companies in the Russell right now. If you want to look at one, look at something called ATKR, Atcore.
Okay. So I want to get transition to this topic now without getting political, because I really don't want to have a political discussion right here at all. But Iran and Israel. So without going super deep into the politics of it, they have, and I got to pull up some tweets. They are prime on saying we're attacking Israel, at least the latest on Wednesday. What impact are the markets kind of? Do you think it's a free fall right now because we're preparing for this? Because Iran's like really serious about going into an all-out war.
No one gives a shit about either of those countries, dude, and I don't personally care either. You know,
but you don't take this threat seriously? You think Iran's just why?
First of all, the amount of impact that they have, like Iran has in terms of like oil, is not that much. they don't really sell to us anyway, right? Most of our oil comes from the Saudis, the Kuwaitis, and all of that. And they've basically said that we're not getting involved with this bullshit. We don't really care, you know? So I think right now, if you really wanted to worry, the people that, if the Saudis and the Israelis were going to war, then I'd say we have a problem. But dude, both Israel and Iran and they like saber rattling. The problem is whenever anything happens, like, okay, first of all, Amit,
Yes.
we drone striked one of their generals. And what did they do? They launched a couple of missiles. Did anything happen after that?
Not really. No.
Right? So what's the difference?
So the only difference here, and I agree with you, I think the stuff I've been reading over the weekend, and it could be propaganda or whatever, is that they are serious about going into a full war. Russia has been sending them a ton of weapons through their jets, and Russia wants to support Iran. And I don't think Iran has a nuke, but they're saying they have a nuke. And like, is this kind of Black Swan World War III thingish potentially?
All I'm gonna say to Iran is just get it over with, drop it if you have it.
Yeah,
Call
I
it a
don't think
day,
they have it
bro.
either. I don't think they have it
You
either.
know.
No.
So even if they did, look, I'm over the war over there. Okay, I'm over that. All these people, they hate each other, the point where they can't live with each other. I think it's just I'm over it, dude. I don't know about you, man. I'm
No.
over it. You
I'm
know?
over it as well. And I think markets usually tend to bounce off of a first attack. As soon as the first bomb drops, markets internalize it and move on. I think markets are scared right now because they think, hey, this could happen. Therefore, we have to like be fearful. But if it doesn't happen, then immediately they would rebound.
So right now the Nikkei is melting apparently. Let me take a look at that. Let's see.
Yeah, that index is down. Guys, let me do a Robinhood update on you guys. So Palantir 2318, Robinhood 1680, Tesla 198, Microsoft 397, CrowdStrike 204, IWM 205, getting a bit of a bounce. GameStop under 20 at 1999. PayPal 59.75, SoFi 625, TFC $40. So we're seeing a bounce. We're seeing a bit of a rebound. Palantir was almost at like 2250. Now it's at 2320. Bitcoin at 56. Okay, so Bitcoin's taking the biggest hit right now, below 57. Nvidia was under 100 for a second. Nvidia is now 101.55.
Dude, I feel like such a schmuck because I was warning people at Nvidia, but I'm the worst shorter, bro. I can't short because I don't have the temperament for it. I know when shit is like about to go down, but I'm just too much of a biatch to do it, man. I know myself. I couldn't hold a short. Like even the Palantir short, it would have covered me so much right now had I held on to it. But
well, so here's the thing. I don't think going short Nvidia makes sense right here at 100. Like
it does, dude. It does.
Okay. So give me your prediction on that because I think Nvidia is closer to 130 by the end of the year. You think Nvidia is what, closer to 80 by the end of the year?
50s, maybe 60s.
By the end of the year, by 2023 or 2024?
Yeah. All you need.
Where do you come to $50 by the end of 2024? Okay, and hold on, two-part question. If it's not 50, if it's $50, you just said you're bullish towards the end of the year. How does the entire market not collapse if Nvidia is $50?
So first of all, the Nvidia is not the entire market. Okay, like
but perceptually, right? Perceptually, it's the whole AI trade.
Bro,
if Nvidia is gone, is AI even real?
Nah, it's one company, dude. Hey, semiconductors are just one part of the equation. Okay, the main issue that I see right now with Nvidia, is that the expectations are so high that even a small issue can make it a big problem for them, and the valuation could take a nosedive. Right. So, like right now, I think this weekend they said that the DOJ is investigating them for something. I don't even know what, but they're investigating for something, right? And then some news came out that like the Blackwell chips are delayed, right? All you need right now is just something of a trigger, and Nvidia people are already kind of like nervous about the market. They've already made so much money in Nvidia gains. There's probably going to be a ton of pressure to sell it, and call it a day. So I would say Nvidia has some room to go down. The other thing is right now, you look at that CapEx for all of the mega cap spending in Nvidia, and a lot of it's going towards Nvidia. If any one of them, because their stock languishes and their operating income gets impacted, they're going to say, you know what, maybe we're going to reduce down our CapEx. And if they reduce down our CapEx, then Nvidia is going to get absolutely smashed, because now the market being forward looking is going to sell it off.
I disagree on NVIDIA going to 50. I don't think that happens. I think the AI infrastructure build out is too real. I do agree there's a little bit of a bubble in certain AI startups and stuff. I don't think the hyperscalers reduce
Dude,
spend unless the consumer weakens to such a degree that Meta stops spending on NVIDIA, right?
semiconductors are cyclical. People always seem to forget about that. You know,
I'm not disagreeing that they're cyclical. I just don't think by the end of the year you see a Cisco level drawdown on
why?
NVIDIA.
Why? It went up that fast. Why can't it come down that fast?
No, it can. I think it depends on Q3. If Q3 Meta's still spending 20 billion or 15 billion a quarter, like NVIDIA's going to put up the numbers, right? There's no way they don't, unless they get word from Zucks. He calls up Jensen and it's like, hey, we're not spending that much in Q1 2025. And then NVIDIA on the conference call has to say, by the way, guys, our expectations are going to go lower for 2025. Then I think you're right. It could take a hit.
Yeah, we'll see.
But I don't think it just randomly takes a hit because we have some more pain.
I think right now the biggest thing that we have to watch for is any intervention from the central banks, because like when you have a 6% drawdown on any of the indexes, like the major indexes, that really does, like, no matter how much the central banks say that they're neutral, the last thing you want is the stock market to collapse and then have to come in and buy up everything just to save the economy. So they'll say every day, all day, hey, like the stock market is independent, we don't really care, blah blah blah, but they'll jump in. And right now the Nikkei, the way that it's moving, we could see some central government move.
When you mean central, you mean Japan's government or the United States?
Japan's central bank.
So what do you think they would do? They would lower rates again after raising them?
I think that no, you could just jawbone your way into submission. So like right now, BOJ can just come out and say that we're done with our interventions. That's it, and automatically now everyone will be fine.
What do you mean? What do you mean? How's that fine?
So one of the things that happened with the carry trade was that all these people were shorting the yen. They were literally shorting the yen, taking the money, buying dollar stuff, right? Dollar assets like, tech stocks and whatever in the US. So right now, that was really hurting the Japanese, well, technically it was helping the Japanese economy because that meant that the yen was super cheap against the other currencies, especially the dollar. That's why if you look at all these, the Kick streamers and the Twitch streamers, all of them were going to Japan to make content. You remember, all of them were going there because the dollar, dude, King Dollar was doing awesome. It was like 160 yen for $1 at one point. So the thing is, it makes everything super cheap for people with a dollar. So they were going there. So now all these orders came into Japan because Japan at the same time was getting a lot of inflows of business. So their inflation rate for the first time started to go up again. So the BOJ, to be on the safe side, they said, okay, look, we are going to do some policy interventions, but they bought some yen.
Right.
And because of that, the price of the yen went down. So if you look at USD to JPY, you can see that there was a $15 correction, a 15 yen correction in a very short period of time. Now, all of these people who were short the yen, they're trying to get out of it. So that's why it's the unwinding of the yen carry trade. I personally think the yen carry trade is done. Like, I don't think that that's going to be relevant as much anymore. I think the markets will rebound from that. That's why, like, on Friday, I ended up selling out of YCL. Like, I made money on YCL this week. I don't know if you saw my tweet last week, right?
Yeah.
So YCL is in my opinion, it's done. I'm not sure if it's actually done. Let's see what happens tomorrow.
So what does Japan, if Japan does what you think they're going to do, how does that help the U.S. markets?
Well, one, the short sellers are not going to be dumping their equities to basically buy back the yen that they've been shorting.
Right.
That's the key.
Okay. Let me ask you now about the consumer. So this is a good post that our friend Crossroads put on the channel. And guys, if you have any questions, put in the chat and we'll try to get Chris's perspective on it. So a couple quotes from Hershey's. Consumers bad. Heinz, consumers cautious. McDonald's, we are seeing consumer weakness. LVMH, obviously people aren't buying Louis Vuitton if consumers bad. Then you have Carvana sake, strong customer demand. MasterCard, customer demand good. Coke, consumer sentiment resilient. Eaton, strong demand in the consumer. So you've got a bunch of companies like Chase, Burberry, Whirlpool, Pepsi, Hershey's, McDonald's saying consumer sucks. Then you have these companies, MasterCard, Coke, Eaton, Carvana saying it's good. What is your take on the consumer? And is it a self-fulfilling prophecy that even if the consumer is not bad, if the market has the prevailing narrative that it is bad, then it becomes bad, and then equities fall because the consumer is broken?
Okay, so bring that page back up again. Let's dissect this, okay? So let's go through the first series that said things are bad. Okay.
Yeah.
So Hershey said today's operating environment remains dynamic with consumers pulling back on discretionary spending. Okay. So one of the things that you have to analyze at the company level is who are they talking about? Are they talking about people that are wealthy? Are they talking about boomers? Are they talking about people who are in the middle income? Or are they talking about just the general consumer or the lower end consumer? When you think about Hershey's is a general consumer, right? Like people are like, whether you're rich, you're poor, you're something in between, you are going to be consuming chocolate, right?
Yep.
So one of the things that you're going to see is a skew towards, hey, if people at the lower end of the spectrum are pulling back from spending on things like confectionery treats because they're tapped out of credit and they're tapped out of and inflation is hurting them, they're going to consume less. So maybe Hershey sees that. Heinz, McDonald's, they are the same exact thing, right? Where they are the general consumer at the bottom level. This is why if you go to a McDonald's right now, it's not as packed. But if you go to Peter Luger's, how many people were there when you went?
Yeah, there was a ton.
Right? We went to that Bond with that Bond place with Adam, the sushi place, completely packed out, right? To the point where we had to get a reservation. So that's one of the things. Now LVMH, I love LVMH how they phrase it. Aspirational consumers in the US. What does aspirational customers mean?
That's such a weird way.
That's a way of saying poor people who want to feel rich. Okay. I'm serious. That's what it means. I'm aspirational, right? They could have just said the general consumer. They didn't say that. They said the aspirational.
Yo, that is the weirdest way. Okay, go ahead. Continue.
No, but it's the truth, right? Aspirational customers. That means that poor people are not buying our shit as much. I mean, that's how I'm interpreting it.
Yeah, because they didn't say like people, or do they mean aspirational as people that want to be like really successful? Therefore, you're aspiring.
Aspirational means people who want to show off. Look, honestly, and this is gonna sound racist, but they just wanted to say poor black people.
I mean, you can make an argument. You can make
an
argument there.
Poor black people are not buying LVMH because right now, a lot of poor black people love designer clothes, designer this and designer that. Like it's a thing. It's a showy thing for some reason among the community, right? If you don't buy a Louis bag, you're not as important. And the thing is, a lot of aspirational people, like if you look at it, rich people, they don't buy LVMH. They don't give a shit about Louis. You know?
Yeah, so, and this is similar with Burberry that also said there was weakness that we're seeing highlighted. Okay, so then the good stuff from MasterCard, Carvana, Coke, does this balance out the bad stuff, or how do you reconcile this?
So number one, I'm not gonna talk about Carvana as much because Carvana is like this whole like just weird thing. Like I don't, first of all, I don't even trust what Carvana says to begin with. But MasterCard says their success was supported by continued healthy consumer spending. See, MasterCard is the general consumer, but people at the top, they're going to be spending a crap ton of money, right? And they haven't seen a slowdown in that spending category. If you look at American Express, which tends to tilt towards more affluent people, they didn't have any issues. They didn't say that, oh, we see consumer weakening, right? So I would say right now, what we're going through right now is a bifurcated consumer. We've had a bifurcated economy and a bifurcated recovery. We're seeing a bifurcated consumer. People who own their houses with 3% mortgages or below, they're doing extremely well. Why? Because most of their disposable income has been growing, but their fixed costs have been steady and they've been staying the same. People who rent, people who don't own assets, people that don't own stocks and bonds, they have not benefited from all the rise up. And so they are right now tapped. They don't have any more COVID stimulus, right? They don't have any of the COVID era protections on housing and all this other stuff. And on top of it, now they're competing against migrants for wages. So they're getting hurt even more.
So okay, let's talk about the immigration thing without being as political as we can get. By the way, they said, Kris, you got your ex taken by a black guy. So that's okay. So lots of illegal immigration is entering the country. That is fueling some of the jobs that are not paying as much. What is the implication of that on unemployment? And does that fall apart if like immigration stops and we have more unemployment than even is being reported because we have a lot of illegal immigrants? How do you think about that?
So, one more time, repeat what you said.
If we have a lot more illegal immigrants, is that propping up the labor force in a way that basically keeps us at low unemployment? But in reality, it's a lot more unemployment than we had just because the people that are filling these jobs are illegal immigrants.
Okay, so a couple of things. When all these migrants they cross over, the government has to spend additional money on legal citizens. Okay, now let me explain why. So let's say right now you had all these people getting bussed over from the border, right? That means that Greg Abbott had to spend on bus drivers to take them to New York City. New York City had to spend money on hotels to support these people. New York City had to hire social workers. New York City had to hire additional security to manage all this stuff. Government right now has been spending a lot of money basically maintaining all this influx of people. That's why if you look at the government hiring, like the government hiring data, they've been expanding that government hiring. I think that's one of the things that we have to remember, that the government tends to be like a liquidity generator. So they will generate jobs and they'll also take away jobs. The other thing is all these migrants that are coming in, they're essentially going to be competing against the people at the bottom of the wage spectrum. Why? Because right now, if you are, let's say, working as a I don't know, as a dishwasher at McDonald's or something, you have to compete against someone who basically has just come from, from the third world, and now your wage, you wanted to get a higher wage, you can't get a higher wage because now they'll just hire them. Same thing in construction and all this other stuff. Now, to me, it's a net good when it comes to inflation, right? Because now what you're going to see is there's less wage inflation and you're actually going to see some wage pressure down. The problem is, who is it going to negatively impact? Is it going to negatively impact a doctor, a lawyer, a pharmacist, a person, an engineer, a software developer? You think the migrants are coming off and competing against them for jobs? No,
Right.
they're competing against the people at the lower end of the spectrum. So what does that do? That creates a bifurcated economy again. So the people who have high specialized jobs, 4-year degrees, with a lot of demand that's unfulfilled, they are the ones that are going to benefit significantly. The ones at the bottom of the spectrum, they're going to struggle. And that bottom that's struggling right now, that is what we're seeing in the data points.
Because basically you're saying if an illegal immigrant takes away someone's job who's working at McDonald's, that person can't spend as much anymore. That consumer is hurt. And that illegal immigrant is not only costing the taxpayer because of all the amenities they have to be paid for.
Let me just address something real quick. I used McDonald's as an example, but I meant like the general stuff. Like McDonald's doesn't hire illegals as far as I know. Okay.
Right.
Now, on the other hand, there are definitely a ton of companies out there that do hire illegals, and they'll do it in a very, like, especially within the construction industry.
Yeah.
Right.
Yeah.
They do it via a lot of mechanisms that are out there. So if you think that everyone working right now has papers, you're really misinformed.
Okay, so last question for you, Kris, and then I'll get into my Palantir preview, guys, for like 10 minutes, and then we'll be done for today. What do you think happens this week? I mean, we were talking on Saturday that RSIs are getting ridiculous. If this drop that we're seeing in Robinhood on the overnight markets continues into the pre-markets, which it probably will, things are going to get pretty crazy. Now, I still think, $400 for Microsoft is, you could say that's overvalued, but $10 for Robinhood is dirt cheap. So what do you think happens this week? When do people step in to kind of bite at the apple of extremely oversold stocks, or do you think they continue dumping the mega caps, as you said, that are a bit more overvalued?
I think we're definitely going to see some pressure going for the rest of this week. I really do think that there's going to be some level of either central bank intervention via via some talks that are gonna like pull the market off the cliff. But this is not 2008. If anyone is thinking that this is 2008, there are so many different factors.
Why? Why is it not 2008?
Because the credit quality is not nearly as bad right now, and at the same time, there's already plan for rate cuts. So the market's already factoring in rate cuts. So the thing is, in 2008, rate cuts weren't even on the table before everything. I mean, the problem in 2008 was that the housing market was collapsing, right? And so a lot of people were left without jobs, and there was a tightening of credit. Like, people could not borrow money. Right now, liquidity is fine. Not to mention, you have one of the dovest, like, you have a giant dove as the Secretary of Treasury. Okay, if at any point anything happens, she is going to make sure that there is enough liquidity that gets flooded into
Who,
this market.
Yellen? Yellen?
Yeah, Yellen is a uber dove, dude.
But she would have to pressure Powell to make this happen, right?
Nope. No, 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 no. Treasury Secretary has a lot of ways that they can manipulate things, dude. So
Interesting.
yeah,
Interesting. All
I
right.
I just think right now everyone needs to just chill, look for some underlying stressors that are causing all of these problems. I think majority of the consumers are fine. We do have a bifurcated recovery right now. The poor are the ones that are getting hit the hardest by inflation, and this is finally starting to show up in the data. And the cure for that is actually cutting rates, because when rates get cut, liquidity starts coming into the market. There's spending that's going to happen. You're going to see a lot more money flow into the lower part of the economy, and also the consumer at the bottom is going to get some relief. And that is the point. And that's what Jerome Powell has been saying, that we understand the people at the lowest are hurt the most by inflation. So we want to make sure that we're tackling this. At this point, inflation is not a problem. So now there's going to be all sorts of programs that come in probably to support that part of the economy within the next probably 6 to 12 months. And I think we'll be fine. Like, I don't think anything's to worry about. The election definitely brings some uncertainty to the market, which is never a good sign. But to think that this is a 2008 scenario, definitely not going to happen. I think one other thing is, I think we already had the recession in 22
Yeah.
when GDP shrank 2 quarters in a row. So there isn't nearly enough bad debt in the economy to trigger a downward move. The only thing that I would say, that something that I worry about, is unwinding of the AI space, but that is not the general economy anyway. So there's no contagion risk there. With banks, there's always a contagion risk, because that can flow into the rest of the general economy. So the banks, that's where you have to be very careful. When money supply is tightened over there, or liquidity issues happen in the banking sector, that can impact the rest of the economy. On the tech side, it doesn't impact as much. It might impact us on a unemployment basis, right? Where unemployment might rise a little bit, but it's not something that's going to be like not everyone in the world works in tech, for God's sakes. It's a very small part of the job market anyway.
So
There's
so so
more.
you so
Yeah.
you think so overall you think we're getting a rate cut in September, and do you think it's more than 25?
I don't think it's going to be more than 25. Like, I think it's going to be 25. The reason why I wouldn't say it's 50 is because the 50 might end up like kind of scaring everyone. So I think right now, if I was Powell, I would come out in the middle of August. I'd be like, I'm cutting 25. He would basically come up with the most like dovish conversations ever. Be like, we did it, guys. We nailed inflation. Inflation is done. Let's have a great time, and basically just like give the market confidence. It's all a confidence game, by the way. All of this is a confidence game. The one piece of advice, and this is not financial advice, this is just advice that I would give to most people, is chill, relax, find the companies, create a shopping list of companies that you absolutely love, and wait until things bottom. And when things are finally bottoming, there's some consolidation. Take your list out and buy those companies and enjoy the ride up. Because that's what I did in 2022, and it worked out really well. And I'm sure that's what you did too, Amit. And we did really well for ourselves. We weren't scared. Oh, Palantir is going to go bankrupt because it's $6 a share for you. I ended up buying some Palantir at the time too, because we both loved the company at the time. I thought the valuation went a little higher after. I bought Meta. I bought a lot of great companies on sale. So I would say millionaires, just remember one thing. Millionaires aren't made during a bull market. Millionaires are made in the throes of a recession and a bear market, and people smart enough to buy things at a heavy discount and just chill. So if you have capital sitting around, save that capital up. Tell your wife, hey, listen, no more Starbucks for the next 6 months. We got to save money so that we can buy these great.
No, but seriously, some people like they literally sold their house when Palantir was at 6, and like I've heard these stories, and obviously they've done very well, right? So but I don't know if that type of opportunity is coming again. I mean, I just find it hard to believe after all these companies have grown so much, unless there is a major black swan event that forces Palantir to go back to 6, Robinhood to go back to 7, etc., that would happen. Meta to go back to 80. But if it does, I mean, yeah,
we won't talk about it. This will be such a small thing in the next 60 days, bro. I'm telling you, remember regional? We had a bigger problem with the regional banks failing. We had banks failing. You remember that last year?
No, literally Silicon Valley Bank, 260 billion in assets, collapses. Yeah. Market digests it for like a couple days, moves on, and then regionals begin their recovery. This right here is like unemployment went up a little bit. Boom. 20% sell off. It's like it does feel like a blip that is needed in a bull market because things don't go in a straight line up.
Yeah. I would say put your faith in Tom Lee and the IWM. That's the only thing I'll say. The guy's not a stupid guy. I know some people are calling him retarded and everything for missing this one thing. And I don't even think he missed it. I think he's just, a little bit late. Well, I would say a little bit early to the party. But there's a lot of great deals that are coming on right now. And this is the time to go shopping and go hunting. So game on.
Thank you, Kris. Appreciate it. Kris's Twitter will be in the description, and I'll talk to you soon.
Later.
All right. So last 15 minutes, guys, we're going to do some Palantir preview because it's still Palantir Eve. We still have our Super Bowl tomorrow for those that are excited about Palantir earnings. I know it's under horrible conditions. I mean, it's not under the best moments. I really thought going into the first week of August, Palantir and Robinhood, my two largest positions, I thought it was going to be fun. Yeah, it's still fun. It's just a different type of fun. It's the fun where you cry, not the fun where you laugh. So nonetheless, we're still going to analyze what happens, go through some of my expectations, and then we'll keep going from there. Hopefully Kris Joining gave you guys a little bit of a perspective on what he thinks. We both remain relatively bullish and think that in the next 2 months, this is not that big of a deal. I don't think NVIDIA goes to 50. That's not going that far, but I do think we'll see a little bit of a pullback as we're seeing right now, maybe even over the next couple of weeks. But in the next 2 months, I do think the bid comes in and they buy up NVIDIA at 100. They buy up Meta if it goes to 400 because earnings growth is still real. And that's what we're seeing right now. Quick update on Robinhood. So Palantir 2330, Robinhood 1618, Tesla 198, Microsoft 396, S&P 525. S&P is down a full 1.4%. CrowdStrike 206. PayPal 59.25, ARK at 40, SoFi 625, TFC at $40, Teladoc 760. Wow, Teladoc 760. DJT 2750, Eli Lilly 775, Bitcoin now 55.8. Bitcoin is the one really taking a beating, and the reason Bitcoin is taking a beating is probably because of the geopolitical threats. Bitcoin doesn't respond positively when this stuff happens, and also I would argue Bitcoin behaves like a growth stock, and if growth stocks are taking a dip, then obviously Bitcoin's going to take a dip with that as well. Okay. Let's do a Palantir preview. Let's do a Palantir preview. It is kind of crazy, dude. 2024, 8 months in, we were like, all right, this is going to be one of the best markets of all time. And now it's like, well, you got to ask yourself something. Well, real quick before we get to Palantir, I did post on Twitter this morning. Things are supposed to be hard, right? Like life's not supposed to be easy. You're supposed to go through a lot of shit to get to the promised land. And I think to an extent, the market potentially is testing us and saying, hey, do you have the balls to hold? This is usually when retail capitulates and gets rid of everything and sells. And then obviously hedge funds, institutions come in and buy up that dip. So although it's been a stock picker's market in 2024, things can get a little dicey given certain stocks you picked are now going through the ringer. I don't know. Again, as I said with Kris, Meta needs to go back to $80 or even 200 given the earnings growth. And if they don't, and this is a 10% correction, which happens every year, then I believe it's a broader test of patience by the market, not sell everything and go, hide under a bunker because things are going to get bad. But I guess we'll see what happens. Z says, there we go. The first smile in 20 minutes. Yeah, we had to smile just a little bit here. Okay. Palantir earnings. So we talked about this on the podcast. I don't have a ton of stuff to add, but I did want to highlight a couple of core things. Real quick, dailypalantir.substack.com. I sent out a newsletter on that. I'm going to put it in the chat. If you're not subscribed, free to subscribe to that. That has my written thoughts on everything in the context of Palantir. Here's the deck from Q1 on Palantir. And I just wanted to go through a couple of things I need to see. Now, let's start off the coverage by saying this. If Palantir fails to put up really good numbers, not even just good numbers, really good numbers, given the macro landscape that we're in, I think the stock is going to take a hit. I think the stock is going to take a very, very decent hit. When I mean decent, I mean 20% down. Now, I'm saying that not because I think Palantir is going to deserve to be down 20%, but if the NASDAQ, which is at almost below 440 right now, if the NASDAQ falls another 10%, or let's say 2 or 3%, and we get closer to the 420s on the NASDAQ, Palantir, right here, 438 on the NASDAQ, it's down 2% again. Palantir cannot structurally, because it's a technology name, maintain its momentum. There's just no chance. There's just no chance. Palantir at the end of the day is at the whims of the Metas, Nvidias of the world. If Nvidia is not doing well, the market's definitely not buying Palantir, which is supposed to be a beneficiary of all the GPU build out, right? It's not the godfather of AI. That's Jensen. It has to be benefiting from Nvidia. So I think if tech takes a really big dip, Palantir is going to take a really big dip. And regardless of the results that they show, if the results are amazing, maybe the dip is subdued. If the results are I think the dip's going to be bad, especially if the macro gets bad. Now, I think that will be a buying opportunity, and I'll talk about why. But, at the end of the day, the price is the price, and you really can't control it if things get that bad. Bitcoin's now down below 55,000. Right here, it's at 55.2. It did touch 54. It just rebounded right above 55. But, yeah, Bitcoin's going through the ringer right now. Okay, so thoughts on Palantir. First of all, this were the highlights in Q1. Commercial revenue grew 40%. In the US, revenue grew 21% year over year to 634 million, closed 87 deals. Customer count grew. Adjusted operating income margin was up. I mean, a lot of good things happened in Q1. Now, Q1 was a good quarter. I wouldn't say it was a phenomenal quarter, which is why the stock fell 20%. But I felt like it was a buying opportunity, and I bought a lot at $20 or $21. Then we rallied all the way to 29. We maintained a pretty healthy premium for at least from a technical perspective, from 27 to 28.50. And then as the market collapsed, Palantir has collapsed with it. Even though Palantir is down 15% over the past month, Palantir is still up 45% year to date. And I think that's important to understand for a lot of people that are upset it's not at $29 anymore. When it was at $29, it was up 70%. Now it's at, it's up 45%. So whether you're down up 70% or 45%, it's an amazing year. But broadly, this number, even up 45%, has to be justified. And the way for it to be justified is by putting up good numbers. So there's only 3 metrics. I'm going to simplify. There's 3 metrics that I care about for Palantir. And these are the 3 metrics I think everyone who really cares about the company needs to appreciate, because if these metrics don't do well, then we're going to have some problems. So first off is customer count. US commercial customer up 69% year over year. That is very good. We went from 155 customers in the United States to 262. Why does that matter? We need a lot of customers. And we need them particularly in the United States, where we're growing the fastest. I think this number will continue to be in the high 60s. And if we can continue to pull up those numbers, then we should see an exuberant amount of customers. Right now, we have total customers, as you can see right there, at 554. That's up 42% year over year. I think we get to 600 this quarter, if not, a little bit more than 600. But if we continue to maintain this 40% year over year growth rate in customer count, again, commercial customer count at 53%, US commercial at about 70%, then we should see some really strong customer count numbers. Now, why does customer count matter if Palantir falls 30%? Because of the macro, or because of they missed on revenue, yada, yada, yada. But you see this number go up, I think you buy that dip. And the reason at least I will be buying that dip is because the customers are coming. The monetization is not here yet. I know the street's getting pretty impatient and they want AI monetization, especially given the arguments around, is there an AI bubble? Is there the only use case, ChatGPT or these like LLMs that you talk to and you get some funny answers? Like, is there a real use case? I think Palantir is what's going to be enabling the trillions of dollars that are unlocked in the enterprise to have massive use cases. We're already seeing this right now in regards to the customers and how they're using Palantir's AIP. But that might not result in paying them yet. And if it doesn't result in paying them yet, then that means they're going to have to pay them maybe a year from now, maybe 3 quarters from now. The street's going to get impatient. I think that's a buying opportunity because we know what's inevitably going to happen. Quite frankly, that's how a lot of us made money buying Palantir in the teens, because we knew the growth was coming. And then we had boot camps. Then we had more product innovations like AIP. And that's how it ended up playing out. The next metric that I really care about right here is top line revenue growth and guidance. So they guided for $650 million of revenue second quarter. I think they come in closer to 670. And if they do, they're growing at 25% year over year. If that number is 655 or 657, and it's like a $2-3 million beat, I think immediately we see the stock take a hit, because they cannot barely beat these numbers. If you're going to call yourself the AI kings and AI is a revolution, yada, 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 you need to beat that number. Now, if they don't beat it, or if they beat it slightly, I'm not going to be upset, because I know there's other things I care about. But in the context of the perceptual understanding of the street and how they think about the AI narrative, you cannot barely meet your numbers if you're seeing all the growth, or you're proclaiming you're seeing all the growth in the enterprise in the context of AI. So I think if they don't come in with 665, 670 on this top line, that's going to be the first sign that Palantir might be under some stress next in the next 24 hours, right? On Monday when they release their earnings. And then revenue of full year growth, 2.67 to 2.689 billion. That is still just above 20% growth. We need to get this number to 2.75. We need to get this to 23, 24% year over year growth. I don't know if they're going to raise it in Q2. Maybe they don't care about raising it in Q2. But if they don't raise it in Q2, even if the stock tanks, and I think that'll be a good opportunity, the street's not going to like it. Now, I believe Palantir gets to 25% year over year growth by the end of this year. So that number is going to be close to 2.8 billion, not 2.6 billion. But the street's getting impatient. They want to see that confirmed via guidance. And if they don't get that in guidance this quarter, again, I think they can get a little upset. I do like that Palantir is below right now. Like Palantir's at 23, 24 versus at 27. When Palantir was at 27 going into earnings, or even 29, you're just asking for failure, right? That's a multiple that we just can't uphold right now. But at 23, 24, given the price targets we got closer to 28 from Citi, Jefferies, Bank of America, Dan Ives, et cetera, I do think we can justify and hold 23 to 25. The macro just has to hold up, and the numbers have to be substantial enough for us to justify that growth as well. Cool. So last number I was going to say, and this is something we talked about on Palantir Weekly, is Rule of 40. So Rule of 40 is essentially looking at your profit margins and your top line growth. You want to be above 40% when you put those two together for a SaaS company. Palantir fell below 40 in Q2 2023. And ever since then, we've been going higher. They put the Rule of 40 in the first deck ever for Palantir earnings. So they obviously are starting to care about this metric. Now we're at 57%. I expect that to get closer to 60. And if that's the case, we're probably seeing top line growth of 25%. And then adjusted operating margins, not of 36%, which is up 2% quarter over quarter and up more than double year over year, but probably closer to 40%. And even if the top line growth is not amazing, if the adjusted operating income margin gets closer to 40%, we're going to start printing free cash flow. And as a result of that free cash flow starting to get printed, I think the street's going to still be able to justify some of the multiples that we're putting on Palantir. So I'm looking for a Rule of 40, which includes top line revenue growth and adjusted operating income margins. I'm looking for commercial customer count. That's one of the most important things in the context of AIP monetization eventually. And then finally, I'm looking for revenue guidance. And if revenue guidance can get closer to 25% year over year, and if that happens, then hopefully we see some momentum for Palantir. Bitcoin is below 53,000. There you go. Oh my goodness. Whoa, baby. We are having some fun now. Wow. That's bad. That's not good. That's really bad, dude. We haven't seen below 53. The lowest we hit was 53.8. That's not good. That's bad. And this is another reason that's hurting Robinhood, right? Robinhood at the end of the day is a Bitcoin proxy. Robinhood 1650, Palantir 2302. Yeah, that's tough, dude. That is that's tough. I saw that about someone was liquidated for about $27 million on their Bitcoin long, or sorry, on their Bitcoin long this weekend as like the market makers consolidated and Bitcoin dropped lower. So there are people that take out a lot of leverage, and that leverage can get you liquidated if the asset moves in the opposite direction, especially in the context of crypto. So we are seeing some of that happen, and obviously that's not the best for people that are leveraged long. If we touch the 40s, that's going to be pretty incredible on Bitcoin. I mean, if we touch 54.3 right now, if we touch close to 48, 49, I mean, dude, we hit 52.36. Wow. We bounced really quick off 52.36. It lasted for like a couple seconds and we bounced back to 54. But I mean, dude, that you can obviously see there would be some downside momentum there. Again, if we get into the 40s, that's going to be the best buying opportunity you've had since January. Question is going to be if the bid ends up coming in place. What do you guys think about Palantir? Let's end it on this. What do you guys think about Palantir? Let me read some comments. What do you guys think? I'll be live for the market open again at 8:45, and we'll try to navigate everything. But it looks like we're going through a bloodbath, folks, and I guess we just have to bathe in the bloodbath. There's nothing more we can do. Nothing more we can do other than deal with it. $20. Okay, let's do this. What price do you think Palantir goes to after earnings? Let's do that. What price? Let's ask that question. What price do you think Palantir goes to after earnings? What price? Because again, I think even the same thing with Robinhood, dude. I think Robinhood's gonna put up such amazing number. I feel so bad for Vlad. I mean, and the whole team. Like, sometimes you remember these are companies that have worked really hard to put up these numbers, and then they put them up. I'm sure Palantir worked their ass off this quarter, and there is gonna be no respect because the market's not gonna give a shit if things end up being as bad in the next couple of days. The problem is it's on Monday too. Like, Palantir's not reporting on Thursday after you get a couple of days to digest some of this. They're happening like if it's happening on Monday, and Monday is a pseudo, not Black Monday like we had in the 80s, but like it's gonna be like a tough Monday. Then any company's reporting earnings tomorrow is going to be tough. Earnings tomorrow after the bell and before the bell opens in the morning. Let me pull it up right now. Tomorrow morning tomorrow's what, the 5th? Nothing really crazy in the morning. After the bell, we have Palantir. Yeah, it's really just Palantir and Hims and Lucid, if you care about Lucid, and Chegg. Palantir and Hims, those are the big ones. Hims also got its ass beat last week as we sold off. A lot of you are saying 20. 20 is the floor. So no one's really, a couple people are saying below 20. Krieger Capital publishes $30 target. 16, 18. Look, if you asked me below 20 a couple weeks ago, I would say it's going to be tough. I think 21, 22, okay. But like below 20, I would say it's tough. Now, you don't know how bad shit gets, dude. You just don't know. So could it go below 20? Yeah. If the NASDAQ falls another 5%, it's almost guaranteed. But I would say we stay flattish at 22. That's my guess. I'll probably be wrong, but that's my guess, is that 22. Yeah, I agree with Mike. 22.40-ish, I think, is where things get bad. But could I see below 20? Yes, 100%. I could see below 20. So there you go. Hims right now, after hours. Yeah, Hims right now. Let's see real quick. Hims is 1686, down 4%. Hims and Palantir almost moving, or Robinhood moving the same way. Palantir now 2298, Robinhood 1620. Again, we did see the dip get bought slightly overnight. Like Robinhood was below 16. Things were like Tesla was even worse, but slight breathing room. Overall, still obviously very, very bad. All right, let's do the last question. Then we'll get out of here. Last question. Do you think it's a recession? And you think the next 6 months are 2022 bad? Let's do a poll. Or do you think it's a correction and then we bounce? You guys know how I feel. I think it's a correction, then we bounce. I think on a fundamental basis, it's very hard to justify horrible recession. But I'll be curious what you guys think. I think it's a correction that was needed, and it's a tough correction, but it's a correction at the end. Like, if this didn't happen now, it should have happened a couple months ago, right? Like, but it's happening now. It's happening at the time of the year where it sucks to happen. Historically, it actually should be happening in August. So, I guess we'll end up seeing how it plays out. All right, polls in the chat: correction or recession? Let's see. It is very seasonal. That is for sure. It is very seasonal. It's the Tom Lee dip. Again, I agree with Kris. I think Tom Lee's right on small caps. Just came a little early. He did. Oh, real quick. Let me tell you. I have his email. He published something today. So Tom Lee said, let me just read what Tom Lee said. This seems to have been driven large in part by the labor market numbers that some interpreted as foreshadowing a broader economic downturn. Jerome Powell later reiterated in his FOMC meeting, I would not like to see material further cooling on the labor market. So Tom Lee saying, hey, if you look at what Jay Powell said, that he doesn't want to see a bad labor market, and we got a bad labor market on Friday, you can tell he's leaning into a cut. Possibly with those remarks in mind, investors greeted Friday's jobs report with dismay. To Tom Lee, it was an overreaction. Markets tend to be a fire-ready aim response to negative surprises, he noted. In my view, the July jobs report is consistent with a soft landing. Lee also posted a rhetorical question. Has the economic picture deteriorated so much in the last 2 days so as to justify a 10% drawdown in both small caps and the NASDAQ 100? In his view, that hardly seems to be the case. We don't see the economic picture as being incrementally that different today than it was at the beginning of the week. And on Friday evening, Lee found signs suggestive, but admittedly inconclusive for now, that much of the jobs number miss might have been associated with the hurricane and its aftermath. That's another argument going on right now, which is that the jobs miss was primarily because 460,000 people reported that they were not able to work due to the hurricane. I don't know if that's an argument that would have kept the jobs number better than it was right now, but that is one part of the jobs data that was skewed potentially to the downside. Tom Lee's intermediate and long-term equities outlook remains constructive, yet in the near term, he suggests patience. Time is required to let the selling get done as investors de-risk. The selling of the last few days cannot reverse instantly. Keep in mind that opportunities emerge when markets panic, and in the coming days, this is the opportunity that emerges. That is Tom Lee's take on the market. Okay, that's what we got. All right, what does the poll say? 64% say correction, 36% say recession. I agree. We'll see what happens further, but I really do think we get a bit of a bounce because things will get pretty stupid this week if we fall another 5%, unless the geopolitics gets worse, the yen carry trade seems to be unwinding to a point where people didn't expect it to be as bad, or we get even worse economic data. One thing I'll tell you for sure, oil prices, I don't know if you guys took a look at oil prices. We're down to 73 on WTI crude. We will get a 2 handle on CPI in August for July CPI, which we'll get the data for next week. When that CPI comes in below 3, dare I say 2.8, the Fed's going to say, all right, it's time to cut. And I think market's going to start pricing that in more aggressively. Market's going to realize inflation's coming down. People are going to realize unemployment is not as bad. Like, again, we're not firing people every month. We are just not hiring as much. I think once markets congest that in, and you see Meta at 370, if it gets there, looking pretty damn cheap. And you still see Nvidia and AI nothing really changed with their earnings or their outlook. Then I think the bid steps back in and things recover. It's just a question of when is that going to end up happening. So we'll see. We will see. Thank you for all right, let me read the super chats. Peter, bro, things are going to get ugly. I saw off a bunch of stuff. I sold a bunch of stuff. Thank God Robinhood is 24-hour trading. Yeah, well, at least even though Robinhood stock is down, at least their app lets you sell things. Obese Tomato, has a soft landing ever been achieved in history? I think the answer is no, if I'm not wrong. But we never had $10 trillion printed in 18 months in history. We never raised interest rates, to 5.5% and had markets go up 20% in history. So I think a lot of historical precedents maybe don't match up. But if you're looking at history, a soft landing is not on the side of potential, given the historical trajectory of when we have to end up landing. Suraj says, can you walk us through a cash secured put on Palantir? So that's going to take some time. I'm not going to do that. However, I will link a video let me link that right now in the chat, where I go in depth about cash secured puts. So that 45-minute video should probably help you a lot more than me explaining it right now. I do think if Palantir gets to 20, for those that are in the wheeling community, or 19, the CSPs will have really good premiums. And I put it right there in the chat. We'll be able to make some good money on premiums if Palantir gets that low. So we'll see. We'll see if that happens. All right, that's it for me. Thank you, everybody, for joining. Sunday Futures is the name of this show now, and we'll be doing it. Maybe we should do it at like 5:45, right before futures open at 6. I kind of like 7:45 though. I like when It's more nighttime, and it's 50. Yeah, it's better at 7:45 because it's 15 minutes before Robinhood opens, which is more fun than when futures open. So every Sunday, make sure you're here. I told my mom that I'm starting a new show every Sunday, and she was like, "Another one?" And I was like, "Yeah, they liked it last week, so we're just gonna be bigger." So I like it too. It kind of gets my mind in order before I do the market open on Monday. And she was like, "Why don't you like go out and like go make some friends or something? Like, why don't you like actually like go out like you're streaming every single day?" I was like, "Mom, I have 1,000 friends who join on the live stream." So to be honest, there's no friends in this neighborhood. Like I'm in a very like suburb. There's fucking rabbits running around, dude. Like there's no friends around here. So I'd rather be here, and I'd rather be streaming. So how many total shows are there now? Well, every morning there's market open, afternoon market close, Palantir weekly on Fridays, and I think we have Sunday futures. And then boom, there you go. That's the Saturday is the one day I get to relax. One thing I did, we went to a little graduation party nearby for this family friend who was graduating, and unfortunately it rained. So we were there, and we were under this tent, and it was like heavy rain in New Jersey. And so I just ended up going back home early because like the rain kind of messed up a bit of their party. So we did have that over the weekend if you were in New Jersey and you saw a lot of rain. But yeah, every Sunday we will be here, and we will do what we got to do. The I wish I bought when it was at X price crowd better be buying. Yeah, I mean, look, there's a lot of people that wish they bought Palantir at 22 and Robinhood at 15. I mean, these opportunities look like they're presenting themselves again. And it's just going to be a question of how quick those opportunities leave or how long those opportunities stay to be able to acquire those equities. But this week we will get a lot more clarity on seeing what happens. All right. Oh yeah, Tech Talk, and we have a Twitter Space. On Thursdays are the craziest day because Thursday is basically like for 8 hours. Thursdays we do a Twitter Spaces, just audio only. So this is the grind, though. One thing I will say. Let me say this one last thing. If we are getting into a little bit of a recession, right, and if things are getting a little tough, and my pockets are obviously hurt by this, my portfolio is down a lot. Like I know it sucks for everybody, right? It really does suck, especially because literally 2 weeks ago we all felt like we were on top of the world. And by the way, okay, I need to say something before I say the actual thing I was going to say. See, this is why I do so many shows, because I have so much shit to talk about. Like it just comes out of my brain somehow in so many different ways. So I don't feel anyone who didn't sell 2 weeks ago, like myself, and I'm sure a lot of people in the chat, should feel bad about themselves, because I don't think you were being greedy. Maybe that's a little contrarian take. I don't think 2 weeks ago, if you didn't sell, you were being greedy. I think, of course, should you take profits? Sure. But I think at its core, you looked at the economy, you looked at the thesis, you looked at the bull market, and you said, it just doesn't make sense to leave so early. Take profits, yes, that's fine. But to completely leave the markets and liquidate 2 weeks ago when you were at the short-term top, I don't think that's a sign of greed. Is it some greed? Sure. But I think at its core, everyone saw fundamentals were in place, companies were crushing on earnings, and it made sense to be like, hey, this is like okay to kind of hold on to it. Which is why I also believe this will rebound, because I don't think it made any sense to have this big of a drawdown outside of the fact that we're supposed to have a little bit of a hiccup at one point in the year. It's just no one can time it. So if you timed it a couple months ago, you would be screwed, right? You're waiting for this 10% correction. If you timed it 2 weeks ago, you would have been a genius. It's just really hard to be a genius and time it as effectively as you need to time it. Okay, that was the first thing I was going to say. Now, final thing I was going to say is it's important to grind, right? It's important to work. So me doing a Sunday show, not only is it something that keeps me into the loop, keeps my mind sharp, keeps me ready to go for Monday morning, and keeps me like acute. I'm already cute, but I want to be acute, right? Like I need to make sure that I'm sharp on the skills. But it's also something that, like, in my line of work, which is content creation, how many times you show up is everything. And I'm sure in other people's line of work that does other things, that if you do something else, it's also about how much work you put in, how hard you go, and how consistent you are. And if we are getting into a bit of a downturn, it's about increasing your value to society at its core, right? It's about increasing your value to society. So whether that's through content creation, whether that's through putting in more hours at the job, whatever it is, it's about increasing your value. I mean, my dad has worked 15 hours a day for the past 20 years and has not complained once, right? And so my work ethic really comes from him, but he does a more physical type of work. I do more creative type of work, regardless of what type of work you do. I was speaking to a doctor on Twitter the other day. They're like, they do 15 surgeries a fucking day, right? So it's like they're probably a dentist or something. It's like you have to do work. You have to make yourself valuable at the end of the day, and you have to show up. And so continuing to show up is really important, especially when things get rough, because when your portfolio looks like shit, you got to make sure that your bank account at least has some cash flow coming, but also that you're doing your best to maintain value to society by working hard to have money to be able to buy the dip, right? At the end of the day, this is what we do as investors. We put our money into the markets. We do something that 99% of the world isn't doing, and we give ourselves a shot. And to have those gains, literally and metaphorically, we have to go through some pains. This is one of those pains. But one of the things we can continue to do to continue to have more money to eventually get those gains is make ourselves as valuable as we can to the broader world, right? And that means working. David says it's important to grind. That's why I'm proud to announce my Grindr sponsorship. That's funny. Ha ha ha. That's very funny. That's very funny. I knew you guys would find some way to establish Grindr into this. Bitcoin, real quick, 53,897 below 54. Grindr, we might get Grindr at $8, folks. I mean, the one thing about this pseudo recession is if we get this sucker back to $8, maybe we have an opportunity finally to buy the dip on that one. But yeah, at the end of the day, I think we're gonna be okay. I think we got to keep grinding, got to keep working, got to keep ourselves occupied as well when things are getting really rough. And mental health is very important in these moments. It really does suck. I know how it feels to be up a lot and then to not be up that much and still kind of hold on and deal with it. Like, so I think going to the gym, I think working out, I think just in general, putting in more hours at work, even if you're not getting paid for it, but just like something that's distracting you. I think all of those things are important because really things can go down. Like, I mean, you can get down a really crappy path when you see yourself down that much money. And mentally, it's important to remember you're still alive. You're still a human being. You know, you still have family that cares about you. You still probably care about other people. And, at the end of the day, it's fucking stocks and it's money and things rebound, but life still needs to be lived. So important to not look at the app. Correct. Important to not look at the app on days like this as well. All right. That's it for me. We'll be back tomorrow. Where's ETH right now? Is ETH also tanking? ETH's got to be below 3,000, right? ETH's got to be below 3,000. ETH is, oh my God. ETH, goodness gracious, bro. I thought ETH would be like 2850. ETH's down 20% in a day. Bitcoin is not down 20% in a day. Bitcoin's down 11%, which is bad, but it's not down 20%. Oh boy. When this stuff happens, I think things get very oversold and buyers step in. It's just a question of when they step in. So we'll see. We'll see where it plays out. All right. Thank you, everybody. 8:45 a.m. We'll be back on the market open and we'll break down everything and keep going from there. Bye, everyone. Thank you for being here. Enjoy your Sunday, and I'll see you tomorrow morning. Good night.